Price action on a higher time frame will always be smoother, more readable than on a lower time frame. And this explanation is quite simple. On lower time frames, the price moves, roughly speaking, more aggressively. On a higher time frame, it is slower and more measured for obvious reasons. And that is why many traders noticed that when they stopped trading LFT, they became calmer. This is due to the fact that when you trade a minute and each candle conditionally moves to half of your stop or take, you feel your range of emotions is clearly more intense than when you trade a pig or invest at all. Therefore, it is obvious that price action on lower time frames will always be more chaotic. And this chaos is one of the reasons why many traders are still in the loss zone or without a loss. And in fact, they are trying to look for some demons, fuck-ups, mistakes. But if they just thought and looked at this picture, they could probably come to something. Profit is the result of not one position, but a system, after a certain sample. And it is important to understand that any loss in trading, if we are not talking about gambling, but about a systemic SL, is a fee for testing your idea. When many stops are caught, traders develop some disappointment, fear, loss of mental mood, and very often disappointment strongly correlates with the expectation regarding the result of positions. The more a trader thinks that he knows what will happen next, the greater the level of disappointment will be when it does not happen. If you forget that we trade probabilities and we do not know what can happen in the market, and you build your expectations thinking that 100% long or 100% short, because knowing what will happen next is not fundamentally important for profitable trading. These are entries. That is, the accuracy of entry is one of the main problems of traders who come to the market, especially beginners who are not yet profitable. We have a clear roadmap to systemic profitability. It consists of two aspects, technical and mental. Technical, you are familiar with it, is primitively simple. Fundamental aspect is a narrative on which we rely to highlight the point, and it is also a key zone, highlighting point B based on our narrative. It is also a target, highlighting the current point C, which cancels the idea. This is very important, because this is a mistake of many traders opening a position using acceptable entry parameters. Mental roadmap is a routine basic aspects, like the MPA journal, and so on. This is their analytics, plus optimization, that is based on your routine metrics. You then develop a systematic approach. What is a systematic approach? Is when you do not think that each individual trade is profit, and you think through time and the method of 20 positions, and of course, risk acceptance. This is an understanding of comfortable risk, an understanding of the risk system, an understanding of the risk threshold. These are two key tasks within the framework of technology plus psychology that will guarantee you consistent, or rather, consistent process equals consistent profits. Position analysis consists of three aspects: analysis of the system's point of view, analysis of the psychological and technical. And each of these aspects has three questions that I ask to analyze the position. System analysis, position according to plan and according to the system, if the answers are yes, great. We move on to stage number 2. Psychologically, the position is closed opened early. The position is opened without fear of doubt. The risk is accepted. The position does not cause discomfort. Answer these questions. If within the framework of the system aspect and the psychological, everything is okay with you, then we move on to the third stage, technical. And it is the most difficult because many traders like to make mistakes here. Because if the first two aspects are more obvious, system and psychological, then here you can invent so much that you can break your head. That is, I make an objective assessment of how realistically I looked at the chart. Did I take everything into account in terms of variables? The second is important. Did the narrative work? What did the price do? I am conducting analytics optimization of my stop and risk management. And thirdly, is the target rational? How rationally did I answer? Mark the target on the chart. And how rationally was the stop loss set?